Bitcoin, a comprehensive guide. Bitcoin is a digital currency that has taken the world by storm. It was created in 2009 by an unknown individual or group under the pseudonym Satoshi Nakamoto. Since then, it has grown in popularity, and it is estimated that there are over 100 million Bitcoin users worldwide. In this video, we will cover everything you need to know about Bitcoin, including its history, how it works, its advantages and disadvantages, and its future. History. The idea of a digital currency has been around since the 1980s, but it wasn't until 2008 that the concept of Bitcoin was born. The creators of Bitcoin used the pseudonym Satoshi Nakamoto and published a white paper titled Bitcoin, a peer-to-peer electronic cash system in October of that year. The white paper outlined how the digital currency would work and how it could be used to facilitate online transactions without the need for a third party such as a bank. The first Bitcoin transaction was made in January 2009, and by the end of that year, more than 1 million Bitcoins had been mined. Bitcoin's early adopters were primarily tech-savvy individuals and libertarians who were attracted to the currency's decentralization and lack of government control. Over the years, Bitcoin has had its fair share of controversies and setbacks. In 2013, the price of Bitcoin rose to over $1,000, but it quickly crashed and lost more than half its value. In 2014, Mt. Gox, a Bitcoin exchange, filed for bankruptcy after losing 850,000 Bitcoins worth over $450 million. Despite these setbacks, Bitcoin has continued to grow in popularity and value, with its price surpassing $60,000 in 2021. How it works. Bitcoin is a decentralized digital currency that operates on a peer-to-peer network. That means that there is no central authority or intermediary, and transactions can be made directly between users without the need for a third party such as a bank. Transactions are verified by a network of users called nodes, which use complex mathematical algorithms to confirm and record transactions. This process is known as mining, and those who participate in it are known as miners. Miners are rewarded with new Bitcoins for their work, and they also receive a small fee for every transaction they verify. Each Bitcoin transaction is recorded on a public ledger called the blockchain. The blockchain is a decentralized database that stores all Bitcoin transactions since the currency's inception. It is distributed across a vast network of computers and is maintained and updated by nodes all over the world. Advantages and disadvantages. Bitcoin has several advantages over traditional currencies and financial systems. For one, it is decentralized and operates on a peer-to-peer network, which means that users have more control over their money and can make transactions without the need for a third party. This also means that transactions are faster and cheaper than traditional banking systems, which can be especially beneficial for people who need to send money internationally. Another advantage of Bitcoin is its anonymity. Bitcoin transactions are recorded on the blockchain, but the participants in those transactions are not identified by name. Instead, they are identified by a unique digital signature, which means that users can make transactions without revealing their identity. However, there are also several disadvantages to Bitcoin. For one, it is still a relatively new and volatile currency, which means that its value can fluctuate wildly over short periods. This can make it a risky investment, and some people are wary of putting their money into something that is so unpredictable. Bitcoin is also not widely accepted as a form of payment. While there are some merchants who accept Bitcoin, it is still not as widely used as traditional currencies such as the US dollar or the euro. Finally, Bitcoin is vulnerable to hacking and fraud. While the blockchain is a secure and tamper-proof ledger, individual Bitcoin wallets can be hacked, and users can fall victim to scams and phishing attacks. Future of Bitcoin. The future of Bitcoin is uncertain, but many experts believe that it has a bright future ahead of it. Some predict that the currency will continue to grow in popularity and value, while others believe that it could eventually replace traditional currencies altogether. One of the biggest factors that will determine the future of Bitcoin is regulation. Currently, Bitcoin is largely unregulated, which has led to concerns about its use for illegal activities such as money laundering and terrorism financing. If governments around the world begin to crack down on Bitcoin, it could affect its popularity and value. However, there are also efforts underway to make Bitcoin more mainstream and accessible to the general public. For example, several investment firms have begun offering Bitcoin funds, and some companies now allow employees to receive their salaries in Bitcoin. Bitcoin is a revolutionary digital currency that has the potential to change the way we think about money and financial systems. While it is still a relatively new and volatile currency, its growth in popularity and value over the past decade is a testament to its potential. While there are certainly risks and drawbacks associated with Bitcoin, it is clear that the currency has captured the imagination of millions of people around the world. Whether Bitcoin will continue to grow in popularity and ultimately replace traditional currencies remains to be seen, but one thing is clear: Bitcoin has already made a significant impact on the world of finance and technology. If you're interested to invest in Bitcoin, then create Binance account and buy it. Binance link is in the description below.